India economic collapse, this could spell trouble in 2016. India's economy expected to slow in 2016. In the midst of a weak global economy and a China stock market crash, India's economic growth rate has eclipsed all others. The Indian economic outlook for 2016 is bright relative to the global economy, with businesses expressing enormous faith in the leadership of Prime Minister Narendra Modi. However, the nature of growth matters. India's central bank governor, who called the country an island of calm in an ocean of turmoil, is warning that growth must be achieved the right way. Source: The Wall Street Journal, September 18, 2015. Raghuram Rajan was given the top spot at the Reserve Bank of India in September 2013. Between 2003 and 2007, he was Chief Economist at the International Monetary Fund, and he's currently on leave from the University of Chicago where he teaches at the Graduate School of Business. Rajan made waves in 2005 when he predicted the upcoming financial crisis. I know a lot of people try to claim they prophesized the stock market crash of 2008, but Rajan is legitimate. His paper, titled Has Financial Innovation Made the World Riskier?, was presented at an illustrious assembly of economists and business leaders. In it, he pinpointed specific problems that ultimately blew up capital markets. A lot of people were really upset by his claims, and brushed it aside as fear of progress. They stopped laughing when it turned out he was right and they were wrong. All this is by way of saying we should pay attention when Rajan issues a warning. Indian economy outlook for 2016. Right now, India's economic outlook for 2016 is ideal. It eclipsed China as the fastest growing economy in the world, pushing forward at a perilous time in the Middle Kingdom. A gargantuan stock market crash in June has pushed China to the brink of economic collapse, sparking broader fears about global economic growth. Meanwhile, India's inflation is receding and investors are bullish on the leadership of Narendra Modi. A drop in the rupee came last month as Asian markets were touched by financial instability. But for the most part, India is a beacon of light in emerging markets. Yet investors shouldn't take that as an all-clear sign. Some skeptics argue the Indian economic growth rate is higher because of statistical manipulations, rather than genuine on-the-ground growth. In this difficult environment, growth has to be obtained the right way, Mr. Rajan said at an event in Mumbai. We have to work hard to strengthen our current recovery and put it on a more sustainable footing. Narendra Modi should take Brazil as a warning. Mr. Rajan's warning was probably directed at his own government as much as investors. Narendra Modi is a supposed economic guru, but he's not invulnerable. Brazil was in India's position a little more than a year ago. Since then the country has had a dramatic decline in economic growth, forcing rating agencies to downgrade its debt. The country's bonds are now ranked as junk, the lowest possible rating a country can get. Source: The New York Times, September 10, 2015. The downgrade means Brazil's borrowing costs are rising. A greater portion of the country's budget must go towards interest payments on its debt at a time when tax receipts are falling. A repetition of this pattern in India is what Mr. Rajan fears. It's possible to grow too fast with substantial stimulus, as we did in 2010 and 2011, only to pay the price in higher inflation, higher deficit, and no growth in 2013 and 2014, Mr. Rajan said. Our own experience suggests that we have to be careful.